What will happen to my investment if the market falls? If there is a very big crash in the market, maybe because of the tariff wars, maybe because of the current Indian-Pakistan war. Let's go back in the history and see how the investment has done pre-crash and post-crash if you would have stayed investor for a very long time. So let's talk about the biggest crash we have seen in the recent time before COVID. That was 2008 subprime mortgage bond crisis. All the market in the world was affected, including India. So that was happened in 2008. So let's suppose you invested just before this crash, most of your money, as you had some surplus that time. So what happened to that investment you made before that crash and how it is doing right now? We have done a fair sampling here. We have asked our staff to pick some chits. In those chits, there was some name of the stocks which was listed as a large cap stocks in the Nifty or the Sensex. So these are the stocks we finally picked: TCS, HUL, Hero MotoCorp and Bharti Airtel. So let's take a similar amount for all of those stocks. We would have invested a lakh each in this stock before the crash. Let's take the date to 4th May 2007. We invested lakh each in TCS, HUL, Hero MotoCorp and Bharti Airtel. So the lakh rupees invested in TCS would have become now around 11 lakh rupees. So that's XIRR of 14% and overall return of 1000% for you. Mind you, this is post the crash of 2008 and post the crash of 2020. What happened to the HUL investment? Similar, we have done 1 lakh rupees investment. This has become 11 lakh 86,000 rupees, a XIRR of almost 15% and absolute return of almost 1100%. With Hero MotoCorp, the return was little abysmal. Lakh rupees investment became 6 lakh and XIRR of 10%. And Airtel, which is a darling of the stock market right now, how it has fared. Not so well, but not so bad also. Lakh rupees became around 5 lakh 70,000, which is around 10% XIRR. So you have seen the 4 stocks we have picked randomly from the chits. They have done fairly well. 2 stocks have multiplied your wealth by 14 to 15% XIRR. That's the annual return for you. And 2 stocks has given almost more than 10% XIRR, which is quite reasonable for this period of time, which is around 18 years. Now let's see how the mutual fund have fared. So that person who invested 1 lakh each, approximately 4 lakh in these 4 stocks, also invested in mutual fund just before the COVID crash, and he was doing SIP continuously. So let's suppose again he invested lakh rupees each as a lump sum in these 2 mutual fund. Apart from that, he is doing SIP of 2000 rupees per month from then till now continuously without stopping, and there was no step up. So we picked 2 funds which is still running, which was there. Names might have changed now. So one is UTI Flexi Cap, which is UTI Equity Fund, and HDFC Large Cap Fund, which was HDFC Top 200 Fund. So total investment amount was 5,30,000 rupees, and it has become 25 lakh rupees, which is a XIRR of 13.3%. What happened with HDFC Large Cap Fund? Again, 1 lakh invested as lump sum and 2,000 rupees SIP has become 26 lakh 24,000, which is a XIRR of 13.5%. So you see, in this period of 18 years, you have seen multiple crashes, and you just invested before a crash. So value of your money then would have gone down drastically. What would you have done? Would you have sold off, taken the losses and move on, put everything in the FD? That could have been a bad decision. Here you just stayed invested, and you have seen your money has grown fairly well. A 13 and a 14% XIRR over a period of 18 years is a very good return. So in this crucial time where people are feeling little bit skeptical or little bit afraid to hold on to their long-term portfolio, go back and check what has happened to the portfolio after many crashes, after many wars. Most of those portfolio, if invested in well in a strategic manner, survive well and paid handsomely to the investors. So in my opinion, right now also, you should stick to your guns, hold on to your portfolios. Thank you.